My client is switching payroll providers next month. The new payroll provider stated they would get two W-2s issued next year, one from JustWorks and one from ADP. This makes no sense to me and I think is bad advice. I want to stop the question here because JustWorks has a PEO and PEOs operate a lot differently than having it because the the W-2s are issued using the PEO federal tax ID number, and the W-2s and the federal returns are issued using the PEO tax ID number. But if they're leaving a PEO and going to a regular payroll, the employees will receive two different W-2s. Normally, yes, the payroll history would be brought over to the new software and only one W-2 should be issued to the employees of the client. And I have just doing what I do, even if the everything is brought over 100% correctly and the former payroll software is canceled correctly. It happens way more often than it should, in my opinion, where both payroll softwares issue W-2s. And what generally ends up happening is the new payroll software does correctly bring in all of the historical payroll. So their W-2 lists 100% of all the wages paid to the employee during the year. And the old payroll software is just going to have a portion of it. But what happens all the time is as long as the W-2s are sent to Social Security from different sources, they get added together. So then what happens is the W-2 wages are overstated, which then will trigger a series of notices. You'll get a wage mismatch notice, and when then the IRS will issue a notice saying that you've underpaid and underreported your wages for the year. They always add the additional wages to the last filed quarter of the year. And then they assess penalties and interest based off of that. And that is the first thing that we need to deal with, is getting the incorrect W-2s all zeroed out. And we do that directly on the Social Security Administration Business Services Online website. We did used to use a different software that was slightly easier to use and had less downtime. However, we had a lot of issues with corrected W-2s not being sent to Social Security Administration until some of them didn't get sent or processed for 10 and 11 months. So we quit using another software and file everything, whether it's a corrected W-2 or an original W-2. If we're not filing it directly through the software, we do everything directly on the Social Security BSO website. And I want to address the sentence. From what I have learned, the IRS only wants one W-2 per EIN per year, or it could cause all kinds of issues. That's not necessarily true. The IRS doesn't care how many W-2s they get that they add together. They as long as the wages are not being overstated, that's where you end up with issues. And the CPA could be correct, could be not correct, that it's not a big deal if the employees have two W-2s next year. The biggest thing is that the W-2s match it. When you add all the W-2s together, does it or does it not match the total wages that were paid for the year?